Bitcoin price went up 15%. So it's time for us to sell some. And Litecoin is on a drop of 12%. So now it's time to buy some. This is part of a trader's day. And analyze the market and to find the best moment for entering or exiting an operation. Let's see how it works. What is a trader? How do you perform a cryptocurrency trade? Do you need to be monitoring cryptocurrencies 24/7? Do you need to be around the clock checking the price of US dollar or euro? The answer is no. In the same way that you don't need to be monitoring all your investment operations, you don't need a video wall with all monitors showing you what's happening all over the world. It's simpler than you imagine. A trader, which is what I do nowadays, buys a currency in a lower price. For example, we purchased Ethereum here at 11.39% depreciation for around $30. And we sell it when we see that the price is going up. For example, the Monero, if we had purchased it for $300 and then we would sell it now that is $348. So it's showing a price increase of around 12.99%. This is trading. You buy a dollar for 3 reais and then you sell it for 350, and you would profit over the cents according to how many dollars you've purchased. This is being a trader. This is the purchasing and selling, or let's call it again, a trading operation, or even not selling directly for cash, but trading one currency for the other. An example of that are people who've made a lot of money from buying and selling or buying and keeping these currencies for a year. Let's take a quick look. Let's say you had already purchased, let's say some of them, some time ago. So click here on Tools. For now, just focus on the present information, the one I'm giving you right now. There will be classes which will cover all the specifics and all the tools and all the details along the way. But right now, let's just stick to this present information. Let's take a look at historical snapshots. Let's take a look at 2013. On April, let's check the price of the currencies. January 2014, January 2015, January 2016, January 2017, and the most up-to-date, January 2018. Let's take a look at what happened in this wonderful market. Let's take a look at what a trader actually did during this time. You probably heard stories of a lot of people who purchased a lot of Bitcoins and they simply forgot their wallets. And nowadays, these people found out they have a lot of money because these currencies increased in value. Let's take a quick peek in 2013, the price of Litecoin. Take a look at the price of Bitcoin, $135. You don't have to believe me. Just take a look at the history of these currencies. It's available on the internet and you can check it anytime you want. Not only in CoinMarketCap, but also in many other websites available on the internet. So you can see here the price for the Bitcoin, for example, $135 in 2013. And keep in mind that Bitcoin was launched in 2009. The price of Litecoin, for example, 4.33. Pure coin was 38 cents. Namecoin, $1.18. Terra coin, 65 cents of a dollar. Dev coin, for example, at 0.00034, less than half a cent of a dollar. And look at how many coins existed until 2013. Has the market evolved? Take a look at January 2014. The quantity of currencies available, 67 available currencies. How much was Bitcoin? $864 in 1 year. So take a look at the price of Litecoin, which was $4.33. If you have already become a trader and you learn how to buy this currency, which you will learn in the next classes, so you'll learn to purchase this currency in January 2013, and now you're selling it an year after for $25.13. Take a look at the increase in value that you've had. Bitcoin grew up to $864. Ripple, starting their business in the market, 2 cents. And Pure Coin going up to 7.21. Pure Coin used to be 38 cents of a dollar. I'm talking about more than 700% raise in price, in value, in a year. Let's take a look at, so in January 2015, take a look at the price for Ripple in 2014. Still 2 cents. Nothing actually happened to it. But for example, Bitcoin had a price drop. People who had invested in Bitcoins, which was $864, let's say these people know where to find information, where to analyze the market. Investor realized there would be a price correction in this currency. This person substituted, they traded this currency for another currency. Litecoin had a price drop down to $2. Ripple continued, kept its current price at 2 cents. And then we also had new currencies available. Dash was placed in 12th and the price was $1.70. Dash didn't even exist some years ago. You imagine like how scared these people were to see this price drop. So if this person was already familiarized with the trading operations, followed the official forums, or if they could find information on the internet to seek privileged information, this person was actually capable of predicting this. This person, for example, sold their Bitcoins into dollars when the price was 864, and they would rebuy it when the price was 281, for example. This is what we will teach you during our course. This is being a trader. Take a look at what happens in 2016. Bitcoin starts going up again and hits $431. Ripple has a price drop and it goes to less than, let's say, half a cent. Litecoin has a price raise again at $3.49. Ethereum makes its debut in the market at 95 cents. Dash at $3.25. It climbed up from 12th to 5th place. Are we expecting a market raise in 2017? So take a look at the beginning of 2017. Look at what happened to these currencies. Bitcoin price went up to $963. So if you were monitoring the market and you bought your Bitcoins again or purchased any other one of the currencies, take a look at what happened by the end of 2017 and early 2018. So Bitcoin went up to $17,000 in January 2018. So the question is, was it worth it for people who purchased Bitcoin? And how about Ripple? Was it worth it? Now at $3.19 and in early January 2017 was under half a cent of a dollar. How about Ethereum? Is it worth it selling it for $1,098 when you bought it for $8.26? So is this a great market? Was it worth it for you to see Litecoin at $4.37 in January 2017 and now you were able to sell it for $300? This is our market. This is being a trader. I could go on and on with mostly all of these currencies and showing you how much they were worth. I could talk about all of them individually to show how much they valued. You obviously need to know the right places to seek and find this information so you can predict when the prices are going up. How can I predict this? Microsoft, Lenovo, Apple, they all start to align with some projects. Steam starts accepting Bitcoin. All this media fuss and all these news company or an institution showing support for these currencies, they also bring this high cryptocurrencies. So Ethereum, for instance, was exactly this. So some of these big companies started accepting Ethereum as payment. So very quickly, lots of people realized that Ethereum was going to continue growing and they started buying them. The more people are buying these currencies, the more they value. So this is supply and demand. This is being a trader. So let's perform a trading operation so that you can see it in the real world how it works. Right now, I just want you to watch me doing, but don't get stuck on details on how to do this at this very moment. There will be a specific class to show you how to register yourself on a currency, on a Bitcoin or a cryptocurrency exchange. So how to validate your documents, to enable the two-step verification, buying and selling of a currency, and also profiting from it. So let's purchase Ethereum Classic. I'm going to click here on ETC. Just keep in mind I'm buying it at $30.79. So it has a 10% depreciation at the moment. So let's click on Bitcoins and I'm going to purchase them using Bitcoins. Classic Ethereum. So let's purchase, let's say 5 units. 5 units of classic Ethereum. This person wants to trade 70 units. I'm going to click on this person. This person wants to trade 690, but I just want to buy 5. I buy as much as I want to. Since this is according to the exchange regulations that has a minimum order, which usually is 0.0001 Bitcoin. So here I am. I'm going to buy 5 classic Ethereum. I'm going to buy for this price. I'm going to click on buy. So I just bought 5 classic Ethereum at 0.0299 Bitcoin. Great. So what now? So now I'm going to wait for its value to, to grow. Or I will put a stop limit. So I bought it for $30. So if the price has a drop and it drops, let's say for $27, it automatically sells it. So I don't have a bigger loss. This is our calculated market risk. You choose, you decide how much you can afford to lose. If price continues climbing as it has in the last years, can you imagine the profits you'll have? So you have the stop limit, you have your preset loss minimum. Do you have a maximum profit? No, you can leave that open. So let's say you can keep this currency for a year, obviously monitoring what's happening to it. So you have apps, official forums for each of the currencies, internet web pages to monitor, and you also have to keep track on what's happening in the market in a way that you can predict if a currency is going up or down. Let's imagine this. You've purchased the classic Ethereum. It's going to be announced a new partnership with classic Ethereum and another company. Let's say that instead of keeping your classic Ethereum, you're going to change your classic Ethereum to Ethereum or to Bitcoin. This is being a trader. So you are inserted in the market. You will know the right time for buying, the right time for selling, or even to exchange your currency to another one. All of this you will learn right now in our course with details in all the classes.